but growing load growth is something that utilities are trying to deal with right now as some of these new sources of electricity come online. And nuclear, we think, is going to play a key role in that development.
Hello, you're watching Proactive. Joining me is Sprott Asset Management CEO, John Ciampaglia. John, very good to speak with you. It's been a while since we last spoke, and since then, there's been very positive developments for uranium and uranium miners as well, really sparked by President Donald Trump.
Yeah, it's good to be back. It's been a lot of news flow in the uranium sector over the last few weeks, which has given a really strong boost to the sector. And just last week, President Trump finally came out with 4 executive orders, which I think the industry's been waiting very patiently for. That really bolstered support. And I think confirms support because I think there was some anxiety about all the budget cuts, whether they were going to impact the nuclear sector. And these 4 executive orders really cover the whole gamut of the nuclear fuel supply chain, everything from encouraging more uranium mining in the United States to reshoring parts of the nuclear fuel supply chain, which Russia is still a key player there. And then the development of new technologies, these kind of next generation reactors, which everybody is very focused on to really help with future load growth that's really being driven by things like AI, data centers. So it was a very holistic bill supporting the whole sector and streamlining regulatory approvals, which is a really big issue, I think, for all infrastructure projects that we're seeing. We need to streamline the timelines to bring these things to market. So very positive and well-received news.
And we did see a reaction from the markets, both for uranium miners as well as the uranium price. Is this the catalyst we've been waiting for, John?
Yeah, I mean, that's the number one question I've been getting from our investors over the last several months is they look at the longer term fundamentals and they say this is really positive and constructive, yet the short term noise in the market, obviously a lot of it was driven by tariff threats and trade wars. And they're waiting for that signal, they're waiting for that catalyst. And we think this is it. If you look at where the spot price of uranium has trended, we kind of bottomed out at around $63 a pound about 6 weeks ago. We're now at about $72 a pound. So we clearly hit a bottom and we're grinding up higher. And the uranium stocks have done even better. They're up about 40% over that same time period. So it has really obviously translated into much stronger performance among the miners. One of the phenomena that we've been watching in the uranium mining stocks of late has been short interest. And that's basically where investors are taking the opposite view, meaning they're selling uranium stocks short on the expectation they will go down in price. We've seen a number of these companies with very high short interest ratios over the last few months. And it feels to us like there's a bit of a short squeeze, meaning these investors are being forced to come into the market and to cover their short positions. And we think that has actually accelerated some of the gains in the last couple of weeks.
I mean, we've chatted about this before, John, and I mean, you like to have a bit of exposure to both, so both to the spot uranium price as well as to the miners, because you get that leverage from the mining companies, don't you?
Yeah, the mining companies obviously provide a lot of that operating leverage and optionality. There's still a lot of development going on in the uranium sector right now because a lot of the mines were shut in for many, many years. So as the price signals strengthen and the demand signals return, those development companies have been really strong performers of late. And so our partnership with Han ETF provides, a spectrum of different uranium funds from physical ETC, which is the only physical uranium ETC that's available in Europe, to our uranium miners and our junior uranium miners. So investors have a whole choice there to pick from depending on their risk tolerance.
And maybe just dipping into the dynamics, you mentioned a while ago the dynamics for the uranium sector. And I suppose US power consumption is expected to surge due to growth in data centers to feed into all that AI and crypto demand.
Yeah, it's probably the number one driver of load growth on the grid. And this is something that the industry hasn't really had to deal with for the last 20 years when load growth was essentially static. And this is why there's a big push for nuclear in large and small scale, these small modular reactors, these hyperscalers, the Microsofts and Googles of the world. they're kind of embracing these small modular reactors as part of the solution. They're obviously very focused on renewable energy. We think natural gas is another part of the mix there. But growing load growth is something that utilities are trying to deal with right now, as some of these new sources of electricity come online. And nuclear, we think, is going to play a key role in that development.
John, that's definitely one to watch in the months ahead. I hope we'll catch up again soon.
Yeah, I would love to. It's a very exciting time.